Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our weekly analysis of the markets. I'm actually in the middle of a break at the moment, guys, but after what happened on Thursday and Friday, I just thought I'd better just get into the office today and do a little recording to give us an idea of what's going on, if we can get an idea of what's going on, and make some decisions as to what to do. Um, so let's just talk about that, and then we'll take a run through the charts to see how things have changed and kind of determine what we're going to do about it, if anything. So on Thursday, we had the FOMC economic projections and the Fed interest rate decision. And it shocked the market because they were a little bit less dovish than they normally are. They kind of indicated that if current levels of inflation continued, then they would bring forward the timeline of their starting to taper and starting to increase interest rates. Now, obviously, it's still going to be over a period of the next couple of years, but as is usual, the market reacts, and usually it overreacts. Now, my particular account was sitting at 11.5%, and I was chuffed. I was over the moon because the target for the year is 20%. And obviously, when you get more than that, fantastic. But the trading strategy we're using at the minute is to try and give us 20% return for the year. So we were sitting at 11.5% in June. I thought, fantastic. We just need to keep this up for a few more months. We'll hit our 20%, and we might even overshoot for the year. But 20% was good. Bang, bang, bang. We're over near 2.5% down in 2 days, guys. And that's the way the market goes. But we'll have a look and try and figure out, what do we do now? Do we take money off the table? Do we hold on to things? Do we close certain things and open other things? That's the tricky bit, guys, because there was a reason for buying what we bought. There's a plan. And then do you suddenly chuck that plan out the window because the market has potentially overreacted? Now, we don't know, is it an overreaction, or is this the start of the drawdown that we've been expecting? Now, it could possibly be that. And if it is that, then the best thing would be to take as much off the table as possible. But let's have a wee look. Let's continue to look. So what actually happened on Thursday and Friday? Well, we'll go through the charts as we usually do. This was the Dow Jones, guys. This was the S&P. Now, it isn't any more than what we were expecting. That was the NASDAQ. But where I particularly got hit wasn't in any of these. I got hit by the gold price, guys, because I've been hedging. Look at the gold price. I've been hedging against, and that's on 4 hours, by the way. I've been hedging against a drawdown in the markets by getting into gold, getting into gold ETFs, getting into gold mining companies, etc. And they all battered me on Thursday and Friday, guys. So that's with the 2.5% that disappeared off the account, and we'll take a look at that just now. Here we are. We're down to 0.48%. This was sitting at, well, maybe it's only 2% we're drawn down. This was sitting at 11.5%. So it's just over 2% we drew down. Listen, we're still on target at the moment for hitting our 20% by the end of the year. But if this continues, the drawdown continues, then that could start to get eroded, and then it throws the whole year out. So that's the decisions that I'm kind of toying with at the minute, and the reason why I decided to sit down in the office today, have a look at it, and decide what I'm going to do about it. Over the weekend, I thought long and hard about what's going on with gold. When you've got inflation, you expect gold to be a safe haven. So as money's coming out of the equities, you expect it to go into gold. So I think on the long term, and this is the thing, because I haven't been trading long term recently. We've been jumping in because we've been expecting a big drawdown. but we didn't know when it was going to come. We've been getting in, taking 5%, getting out, getting in, taking 5%, getting out. I'm talking about each individual trade. And then starting to get into value stocks, which won't be as badly hit by inflation, fears of inflation, and also getting into gold, which is a hedge. But it's the hedge that's battered me. So that's the thing I've got to think about now. So let's look at the portfolio and we'll go over it. AMD still up, Amazon still up, Boeing dropped a little bit, but that's nothing to worry about. Remember, these are, that's less than 1% of the account size. Baba minus 0.26, that's nothing to worry about. Baidu minus 4%, so there's nothing there much to worry about. Corsair, now Corsair jumped by, I can't remember, 20-30% last week, and I got it and I closed out on it, and we can look at that chart in a moment. It shot up and I closed out, and we made 30% in one and 20% in the other, whatever it was, which for me, with no leverage, it was pretty good, and I've been only taking 5%. It happened like that on the open, and I just got straight in and closed it. And I thought myself, fantastic, but it started to close the gap. The price started dropping, and as it dropped a few hours in, I thought, you know what? There was a reason why I was in Corsair, because I thought it would go up. I said, we've had a reaction. We've got people profit taking. Let's start buying in again. Well, I started buying in too soon, guys. So it dropped and dropped and dropped and dropped, and I kept adding to it. I'm not overly concerned about it. I do think it will turn around, and I do think it'll give us a good return. We've got 4% of the account on it, which is unusual for me. But it's put a big dent in that 11.5% that we were up, guys. It's drawn down. It's 11% of 4%, but it's still, the overall has drawn down. Everything else until you get the GDX down 12%. Kinross Gold Company down 13%. And where's the other one? Yes, Wheaton Precious Metals down 9% now. So for the rest of them, I'm thinking maybe I take something off the table. Anything that's in the green, I might consider taking off the table, just to let's see how this thing settles down. So we're not going to lose any money, but we won't gain if they go up. But we're going defensive here. And then I've got to have a look at the gold price and say to ourselves, well, is this the start of a big drawdown in gold? Look, it's well oversold, as far as I'm concerned. So what I'm going to be doing today and tomorrow and the next few days, depending on the timeline of this thing, is if we get this coming back up, I've got to then make a decision to say, well, is that the correction and we're going? Because you can see where I was expecting to go, guys. Or is this just a pullback before we go, a bit of a dead cat bounce after that drop, and then we go again? That's the thing I don't know. So over the weekend, the only thing I was interested in was the gold price. And I watched video after video after video of things that have been posted over the last day or two of, let's call it, gold analysts. And they're talking about Basel III. And I thought, well, Basel III, by the way, it's the regulations around, it was Basel I, Basel II, and this is now Basel III. The regulations around trading gold, and particularly in paper gold. Real gold will keep going up, but then your timeline on that could be 2 years, 3 years, 4 years, 5 years. But if you're a gold hoarder, if you're buying real gold, then I wouldn't worry about the gold price. But if you're trading the way we are, and you're trading paper gold, which is what this is, then the story's maybe a bit different. Now, nobody wanted to commit, because obviously it's been complicated by the dollar going up the other day. Part of this was the dollar going up, by the way. And we'll talk about the dollar in a minute. But nobody that I was listening to really wanted to commit and say, hey, this is what's going to happen to gold in the near term. Because you'll find that people have been around the block for 10, 20, 30, 40 years, guys. That's not how they make predictions. They don't say, hey, today it's going to do that and tomorrow it's going to do that, because they understand the futility of that. But given what they were saying, which was that this new Basel III that's coming in, and guys, I'm just kind of ad-libbing what I heard overall, and I don't know if I'm 100% right, but the gist I got off it was that they were going to tighten the rules around the whole idea of borrowing gold or leasing gold from someone who has it, and then setting up ETFs and trading paper gold around that. You don't actually have the physical thing. So they're going to tighten that up and saying you need to have a higher percentage backup of gold. It's a bit like if you go back to when gold was the standard, you couldn't print money unless you had the equivalent amount of gold sitting in your bank. They left that back in the 70s. I think it was Nixon that pulled the United States out of it. And then you had fiat currencies that are just printed according to the economy or our perception of the economy of a country. That's the value of the currency, whereas it used to all be based on the gold price. So if you come to this paper money thing, this paper trading paper gold, what they're saying is that needs to be more connected to the amount of gold. But there's about 25 times, and I think that's the right number. It could be more, it could be 250 times. But there's a massive amount of paper gold being traded that isn't real gold. It's about 25 times higher, 100 times higher. It's massive. That will be curtailed. But for me, that means that the demand for real gold should go up, because the people who are trading paper gold will need to start having some reserves or access to it, an insurance policy. So for me, that means the gold price should go up. But I didn't hear anybody coming out and saying, yes, that's what's going to happen. So it's left me a little bit unsure. I'll listen to more videos this week to see if I can get to the bottom of it. But what they're saying is, yes, we expect gold to go up, but we're not saying it's going to go up this week, next week, or even this month. Which then leaves me with the predicament: do I cut my losses, get out now while we're ahead, become defensive, and then when gold starts going up, buy back into it? Kind of seems like a plan. But what happens then if it starts coming back up today? I mean, you can look at well, not so much here. I was going to say, you can look at some of these and it'll show you, but not so much. Well, say the likes of that. If I closed today and we got a rebound like that, I'd be a bit annoyed with myself, because I'd probably be taking quite a high, maybe a 2% hit if I close it. Whereas we'll leave it open and it comes up, maybe we get it down to 1% before we close it. So that's what's going through my head today. If you get away from the whole thing and you weren't involved in it, it doesn't really look like such a big deal. This is what it's been doing for months. We traded it up and made good money up here, and then we've got this correction. It could end up doing something like that for a while. So we could have a few weeks to think about it before maybe you get your next one down. But I still think ultimately gold will come back, challenge this top, and maybe even at some point break out. Because money's just being printed and printed and printed and printed, guys. So it's just being devalued. So people have to turn to something else. And yes, people talk about Bitcoin, but it's just a gamble as well. There's still people out there saying the whole thing's just a Ponzi scheme. So I do think that gold will start to shine again, and silver, by the way. So for that reason, I might add to my gold position rather than selling. But it is a big gamble, guys, because it could throw out my whole year's profits. I think it will come back, but whether it comes back in this calendar year is the thing that I'm thinking about. I'm saying to myself, it could be in the next year before gold really starts coming back up again. And therefore, you're having to hold on to that for all that length of time, which is a little bit more like investing than trading. At the moment, I don't know which I'm going to do, guys. I closed out. Do you remember that the gold went out a few weeks ago? And I closed them all out with good profits. But when we started getting this structure, let me zoom in a little bit. When we started getting this structure, I said, well, that's a correction. It'll go long from here. I wasn't expecting that, guys. Okay, so that's the one problem I've got. For me, it looks massively oversold. I think it'll come up, but it's not on the way up at the moment, if you understand what I mean. I'm not suggesting it's going to do that. But I think it would come up from here. If you're not in it, maybe it'd be a good idea at the moment to stay away from it. But if you're in it and you're trying to manage the situation, that's what we're talking about. Okay, let's move on. What else is there? So far as the stock markets are concerned, I'm a little bit wary of it's mainly the NASDAQ, as you know, because that's what most of the stocks I have are in the NASDAQ. And I'm a little bit wary that this is the start of the turn and the drawdown that we're looking for, which could come to here and could come even further. And I don't particularly want to get caught in it. So I might just take some stuff off the table, and then we've got, well, at the moment, still got about 40% sitting in cash anyway. And if we took some more off the table, maybe we get it up to, say, 60% cash. So if we do get a big drawdown, we're sitting with the cash, and when we feel that it's getting near the bottom where there's good prices, we can start buying in again. So it's really only the gold that I'm really all that concerned about at the minute. So we just go through. That's the Nikkei. It had a good drawdown, but yet again, it's still within this structure. The UK had that drawdown. There was talk from the Bank of England about increasing interest rates. And this is going to be our opportunities, guys. At the moment, I'm worried about stock prices, but remember, this starts to give us opportunities in the currencies, which I took my eye off the ball last week, guys, because I haven't been feeling great since I've had my the second dose of the vaccine. I have no idea if it's connected or not. But I've just been feeling lethargic, bit achy, whatever, and I think that's what it is. And I also need a bit of a break. So as I said last week, the end of last week, week before, that I was going to take a couple of weeks off. And at the time, the currency markets were going nowhere, and I was actually bored with it. So I said, this is a good time to take a bit of a break, take a couple of weeks, and then I'll come back at it refreshed. Well, 4 days into my break, wham, bam, thank you, ma'am, all hell broke loose, which is the reason why I'm talking to you today, guys. So there should be opportunities in the currencies markets. Whether we get it going in the right direction or not's another thing. French, good drawdown, but yet again, you saw this morning that there's been a recovery. I'm hoping this is what we're going to see on the NASDAQ and the S&P. Nice recovery from that. German, same thing, guys. Sharp drawdown. Is it the start of the bigger pullback that we were indicating the other day? At the moment, I don't know, but I will be keeping an eye on it. Chinese drawing down a lot steeper than what we were necessarily looking for. We were looking for a breakout from there. Aussie. There you go. Gold price will affect them. Iron ore price. And by the way, Rio Tinto hammered me the other day as well. But I think long-term Rio Tinto will be a good buy. Excuse me. VIX, look at the VIX. There you have it, guys. Now, it's going to open up down today, but this was Thursday and Friday. That was some move, folks. That's the insurance policy. So that's what the big boys are thinking about. let's get some insurance on here. Now, this is the big one. I was long in this when it was pulling back. When we got that, because for me, this was an ending diagonal. And I was looking for something like that, maybe not as big as that, though, quite honest, guys, but certainly a nice impulsive move up here. Get some money out of it. Either put stop to zero or take the profits off it and get out. Just based on that little structure there, guys, because of the amount of money that's being printed in the United States, and because the Fed were determined that they weren't going to move on inflation, I was saying, well, we're looking for the dollar to come down into that sort of zone. And if it gets to there, I'll start to long it. Bang, up it went. Unfortunately, the trades that I had on in here, as it started coming back down here again, I just got out of them. Lost a couple of dollars or something like that, or made a couple of dollars. But I got out of them, and then we had that. Now, at one stage, I had a $450 trade on this at 10 to 1. And I closed it out, and I made about $4 on it or something. And I closed it, and then we got that. And I don't have regrets in trading, guys, but it would have been nice to catch that, because that would have offset the drawdown in gold, and we would have been doing nicer. So what now? Well, from back here, I said gold would run flat. I said the dollar will run flat. And of course, you don't know exactly how it's going to run flat. We kind of said, well, it could run flat by running like that, and if it corrects, and then run like that. And then when we started this, I let this run because I thought we were going to get a pull back here. We didn't get it, and then it moved down into here. And that's when everybody started talking about it going further down into there. So I said, okay, well, maybe our range is going to be from there to there. But if it gets to there, I'll be buying. And this is what you've got to do, guys. You've got to set a target. You've got to set a place, and you say, I'm not panicking. I'm not going to buy today. But if it gets to there, I'll buy it. And if it doesn't get to there, it doesn't matter. There's 1,000 things to trade, guys. So if it gets there, I'll buy it. And there you go. Well, as it turned out, bang, that was the turn. Can it still get to there? Well, we're going to have to see what the market really thinks and what the interpretation of what the Fed. But it's not going to get there this month or maybe next month, guys. We'll have to see what happens to those inflation figures. And by the way, timber prices are dropping like a stone. And a lot of other commodity prices, I just saw gold as well. But gold was more affected by the dollar price. But they're dropping like a stone before this happened, by the way. The only thing is oil's still going up, guys. So maybe the inflation is here to stay. So what do you do now? Well, I'm not jumping in here long the dollar. I would have to see this correcting to maybe give me another leg up there. I don't see it going away up there. I think it's going to bounce around in here. And at some point, you could have a dip before it comes back again. I don't see that anytime soon. That might happen whenever the ECB starts talking about cutting back, tapering their bond buying and their share or stock buying, guys. And then you'll get a spike down like that, and everybody's, be panicking about that and buying the euro, and then it'll start to come off again. So that's not on the cards yet. But we did say that this would turn whenever the Fed got less dovish. But we weren't expecting it to be on Thursday, which was the reason why I decided to take about a couple of weeks off, guys. I thought maybe next month, the month after, maybe August, maybe they'll start talking about tapering. So that came as a surprise. Let's see what happens. I wouldn't try and trade it long there. Let's see if it drops down, and maybe we can put an alarm line there. And when we get the next breakout, we maybe trade it up. But we're only looking for short trades, guys. It's a 4-hour time scale. You're looking for a trade into there. Take your profit and then look for another setup and get a bit more information about what the Fed's doing and where the dollar should be going. So you're going to have to hold your horses. Now, obviously, with the majors, because of that, was great trading the other day, which I missed it all, guys. I was out of all currencies the other day. And thank goodness, because it was in them, it would have been in them in the wrong direction. Because I was looking for that to spike up maybe to there and then come off. We got that. I was looking for the pound. Well, no, I'll be honest. I have to be honest with myself as well. When we got that, I said I'm not going to trade this because just structurally this could drop down to here and then I'll try and trade it up. The problem with that is sometimes when it happens, you then don't have the courage to take the trade that you said you would take if it did that. Remember, we're always looking at if then. If price does that, then we'll do that. So you're always waiting for price to do a certain thing that gives you the setup that you were looking for to take a certain trade. But so often when it happens, I go, oh, well, I'm not sure about this anymore. And then you don't trade it. And the next thing you know, you're back up to there again. And you go, well, that would have been a nice trade back up. So I'm not going to be trading it, guys, because of the difficulties I've got myself into with gold. I'm going to be going defensive, guys. So, but if you've got a little bit of boom left in your strategy, maybe the pound long there, guys. Aussie. Now, we went through all of this, and at the time we were just saying, this is why I ended up taking a holiday, guys, because it was 2 or 3 weeks, nearly a month of this, and it happened in the mall. You look at the pound, look at that, going nowhere. And every day I was coming on, look at that, going nowhere. And every day I was coming on going, I've nothing to tell you guys. And it becomes disheartening. So that's why I said, let's take a holiday until something happens. So, but you can see where all my alarm lines were. Now, I did say don't be trying to trade this because I don't know which direction it's going to go. It could either go long or short from here. So I did say don't trade that. I did say don't trade this. The CAD. Look at the CAD. Jeez. But do you know what's surprising about that? Look at the oil price and look where the CAD's gone to. And I know the dollar gets a bit of a boost for the oil price, but nonetheless, I don't see this necessarily continuing on up, guys. Flat. We've got to remember the amount of dollars that are being printed. Look at that one. I was looking for that one in the right direction. Let it settle down, guys. There's no setup there, and the move's already happened. Don't be trying to get into that. But look at that move, and then look what happened, guys. This is what I'm looking for next. Now, you could try and trade it down, but I wouldn't try that one. It's a gamble. But I would not be surprised if we saw the dollar starting to come back off again. Dollar yen. I said the same thing about this, guys, the other day. We're in a double top situation. You would have to look for it to come down to there before trying to trade it long again. But I was short the dollar at the time. My trend in the dollar was short at the time. On the higher time scale. I don't know at the minute. I wouldn't like to try and short the dollar at the minute. We need more information. Look at the Chinese yuan. Although, look at that one. Swiss franc. That was a beautiful move there, guys. Do you know why that happened? That was the double whammy of the dollar going up and gold going down, because Swiss francs correlated to gold. So when gold goes down, the franc goes down. So look at that. Bang. Some nice trading the other day. I hope somebody's caught this, guys. I haven't. I was out of it. And there's the gold. I'm hoping it starts to recover. Listen, I'm not expecting it to come back up tomorrow, but hang around there for a bit and then start to come back up. Silver, same thing. Probably a better bet than gold if you were trying to trade the actual metal, guys. Probably a better bet. Now, to be honest, that isn't any different to that. Look at that correction. And it hung around for a couple of weeks and then we got that. So don't expect it to turn around and go long tomorrow, but it could hang around here for a couple of weeks. It could drop a little bit more, but I still think there's upside in it, folks. Bitcoin. I've got a little bit involved in Bitcoin, but I opened a Coinbase trade. Because to me, it's not trading. Well, I suppose it is trading, but it's not. It's gambling more than even trading, guys. It's speculation. So I got into it when it was about up there somewhere. So I've watched my money eroding over the last few weeks. But I got into it and said, listen, this is a long-term thing. At some point, it will come long. If it drops any further, I'll add a little bit more to it. Guys, I'm only trading it in the hundreds. I'm not trading thousands of dollars in this. It's a few $100s. So I'm not overly concerned about it. If it dips any further, I might add a little bit more. Oil. Well, we did say that there was only one direction for oil this year, and it was up. And it's up and up and up. When we were in here, I said, listen, you could get a bit of a drawdown within this, but the direction's up. And there you go. It's up again, guys. Remember, we're on 4 hours here, guys. EuroCAD, well, it hasn't done anything. EuroAus, it hasn't done anything. Euro New Zealand, little bit of a move up, nothing there to write home about. Look at the yen. Now, oh, I was expecting that. I was expecting to see that, guys. I'm looking for the yen to take off structurally, just because of the technical aspects of this. And I don't want to start explaining it again, guys. I have explained it at length over the last few months, the reason why I'm looking for that to go long. It doesn't mean it's going to go long, guys. I'm just keeping an eye on yen pairs, and if it starts to go long, I'll get into them yen long. But I'm not jumping into them now with the expectations of it going. But when I saw that euro yen, I thought to myself, well, the yen must have taken off. Do you know why it hasn't taken off? Because of the yen dollar. That, I think that, yeah, it's because of that. It's because of that, guys. Because the dollar has strengthened up. Notice that it didn't drop, or sorry, it didn't take off in that direction, despite the fact that every other dollar pair has taken off. So that shows you the strength of the yen against the dollar, which is the reason why it's not showing up in the index, guys. But now, I haven't looked at these charts for a week or so, guys. I guarantee you every other, oh, for goodness sake, I'm knocking the bin over here. I guarantee that every other yen pair will have gone long, long yen. That would have been a lovely trade, and we were looking for it. Look, we were looking for it. And what I said about this was, I said, if the dollar, I don't even know where to put this now, guys. What I would have said back here, because I've been doing this for years, guys. I know what I would have said, knowing what we know. I would have said, if the dollar goes long, this will be a good trade. But if the dollar goes short, then potentially there'll be a trade long here. But we were waiting for the dollar to do something. And because I wasn't on the computer in the office last week, guys, I saw it all happening on my phone. But you don't make decisions about trading on your phone, guys. Get onto your charts, get the big picture, and then make your decisions there. Anytime I trade in the phone, I always make trying to think of a polite word. I always make a mess of it, guys. Always is probably the wrong term, but you don't make good decisions on your phone, folks. Euro Swiss. It's different if you're waiting for something and you specifically know, you're waiting for that stock price to hit a certain level, or you're waiting for some. But if it's, say, currencies and something suddenly happened, get onto your charts and check through and make sure what's happening is, or what you think's happening is happening, guys. Pound CAD, nothing much there, guys. Pound Aussie will probably be the same. Creeping up. Coming into that same level, I said a way back here it'll probably run flat, but flat to long. That's why with the arrow in there. But I would wait for some sort of correction there, and then maybe, look at this structure on its own. So if you got a correction within this structure, you maybe can get into a trade there from down here. You'd have your alarm in that direction. Alarm goes off. You've looked at everything else. Yes, the pound's going long. Let's get into this. Get your stop to zero, and maybe you're lucky enough that it continues up over the next lot of weeks. Pound New Zealand, something similar, guys. If this corrects back down to here, look for the next one up. Pound Swiss, and the reason I'm talking about the pound long is because of inflation fears within the UK. Guys, it's there. You go out and try and buy anything. Everything's up. Price of beer. Big Mac, no way people compare economies with the price of a Big Mac in one place and the other. The Big Mac's it's a good thing to be able to do because of the it's one company, and you can kind of judge an economy against each other by one item. Beers are different because taxation in beers is different throughout the world. But for my personal view of what's happening to the economy that I live in, you watch the beer price, guys, because it's the thing that I'm most sensitive to. I couldn't tell you what it costs for a bottle of milk or a loaf of bread. Could you just throw everything in the shopping trolley and you pay, whatever it comes to. But when I go out and I buy a pint of beer, I know that it was £4.20 last month, and this month it's £4.50, and I noticed that. Well, never mind £4. That was 2 years ago. It's now £5.50 for the same pint that you paid £4 for 2 years ago. So there's inflation. How much of it is normal inflation and how much of it is venues trying to claw back some of the losses they made last year, I don't know. If it's that, they're being foolish because people only spend the same amount of money. They just go out fewer times. I went out last Monday and spent £100 on a Monday night. Sorry, it was Sunday, I tell you a lie. It was last Sunday. And I spent £100, and I thought to myself, that's more expensive than I would normally spend. And it was markedly noticed it. And I said to myself, right, I'm not going out again for another week or two. So they're not going to get any more money out of me. They usually get about £100 a week out of me over the last lot of years. £5,000 a year, guys. But I do get a lot of enjoyment out of it. Well, when I say £100, that includes taxis and something to eat, guys. I didn't drink £100 worth of beer. Probably only about £50 worth of beer. I jest. I actually don't drink that much. There we go. Pound euro. Don't know. Possibly up. Pound yen. There you go. Now look. I called it. I drew it. I put the alarm in. I said that's where it's going. And I didn't have the courage to trade it. Now what we got to say to ourselves, well, is that it? Or are we going to get a bit more back closer to that trend line? Now remember, the trend line can change, guys. So, but potentially we've got a steeper trend line. That's on the higher time scale, that's a trend line. Maybe the trend line's a bit steeper, not at the minute. But has it reached the peak? I would be happier to let this run for a bit and then maybe trade it back up. In other words, if we go back to the yen, and yet again, I don't know that we're going to get this, guys, But if we got that in the yen, I'd be happier to trade the yen back down from there. I'm not expecting the yen to do that, guys. I'm just expecting a little bit of a push up. Look, see there, a little push up there, which then went on in a run. But the initial push was that, and then you got a big enough pullback that. So you're looking for that trade there, guys. And there again, look at that one, same situation. I think that's actually where I copied this from. Maybe it was that one. Not sure. I think it was probably that one there I copied. And then you get the spike out of it. That's what we're looking for over here. Now, so far, it's kind of worked out the way I thought it would, but we haven't had the spike yet. Are we definitely going to get it? I don't know, guys. But we've come up against this trend line. Now, it has broke out a little bit, but I'm not pernickety about that, guys. These trend lines are just, they're not set in stone, guys. It's just a line to try and give you an idea of what the trend of that thing is. And the trend has been up in a corrective manner for the last 4 years. So is it going to break that? Well, it is possible that it breaks it. Let's go and look out to the daily time scale. It is possible that it breaks it. But given that pattern, I'd be more inclined every time it comes down, it comes back up, drops, comes back up, drops, comes back up. At least with something to think about today, guys. This is what you come in for. This is what you do the analysis for every day. That's something to think about. So if that were to take off, the only thing I would say is that we're looking for a bit of upside to the pound. So maybe there's not going to be as much downside. You can see it's rallying at the minute, guys. Remember, this is on the daily time scale here. Let's go down to the 1 hour time scale. I'm still a little bit hoarse, guys. This was one of the reasons I stopped doing the recordings over the last week or so. There's that bin away again. Let me move it out of the way. It's a waste paper basket, guys. Maybe the trade's long in that. I'd prefer to see a bit more downside to it, but guys. Aussie, yen, yet again, bang. Down it came. Look at what happened the last time it dropped into that level. Hung around for a few days, excuse me, and then started this. So entirely possible that we'll get more upside to this, guys. It's come back down into this level. So if this is going to run flat, on a higher time scale, then there's every chance that this is going to come up into here, guys. Which maybe puts paid to my idea about the yen taking off. The only thing I would say is because this is linked to the yen dollar, I'm pretty sure it's certainly correlated. Let's go back to it, guys. I know I'm kind of dwelling on this a bit, but I see it as a potential opportunity. But at the same time, I don't want us to get fixated by it in case it doesn't happen. Let's take this out to, say, 4 hours, and then we'll bring in DXY is going to be no good because it'll be the other way around, won't it? Oh, no, I know what I wanted to bring in. Not DXY. I'm going to bring in this. Yeah, this is the opposite way around. So let's just copy that. Oh, where are we? Where's the copy? There we go. We'll copy that. Took me long enough. Copy that. And then go over to this. I just want to see if this is how tightly correlated this thing is. Look at it. It is. You can see it is. Obviously, it's inversely, but paste. And then we've got to get it down to the same time scale. Flip it first. Oops. Flip it. Right. Draw it down. And then get the... It's this that we copied. Where's the... There we go. Oops, that's the old one. Right, so it comes in here somewhere like this, guys. Oh my goodness, it's practically identical, guys. So that is right, what we said the other day. And this is the same with the New Zealand as well, guys. If you're looking for the New Zealand dollar index, it's the dollar, US dollar, New Zealand dollar chart. It's the index. There's your index. Now, the reason that even though the yen spiked up, the reason it's not showing on this index is because the dollar went in the opposite direction. So in actual fact, there is a spike there in the yen. I hope you understand what I'm saying, guys. If this was weighted among all the major currencies as DXY is, then you would see a spike up there. So the spike's happened, but it isn't showing because at the same time that the spike happened in the yen, it also happened in the dollar, and they cancelled each other out. So the only way we'll see that spike in there is if the dollar drops, and then you'll get the yen pushing up, and then you'll see it there, guys. Just gathering evidence, guys, and building a picture in my head of what I need to be looking at. So we've had the spike. Is that it? Or is there going to be more to it? In other words, let's go back to this again one more time. Is that spike going to then turn out to be a bigger spike, more like that or that? The problem I'm having is that because it's invisible, I don't know how big it is. Is it that big already? And therefore you're expecting it to come back again? Or is there a bit more upside to it before it comes back down again? I think, let's keep an eye on these guys. I think the yen and the dollar will come off those spikes. In other words, this will start to recover and the dollar pairs will start to recover from the spike down. In other words, that will start to come back up. That will start to come back up. That will start to come back up. That will start to come back. If I'm right and you trade one of those or a couple of them, there's good potential for it to come back up, guys. The problem is if I'm wrong, then it'll keep coming down. So what do you do about that? Put a tight stop loss. And if it drops, you're out. And then we'll have another look at it in a day or two. And if it starts to come back up, then we trade it up. I suspect it's going to come back up. I'm not suggesting it's going to go up there. But if you look at all of these, I said from a way back here, any of you who've been with me a while will know when we got to there, I said that I think this will run flat. Of course, when you say it'll run flat, you don't know exactly what it's going to look like. But I said it'll run flat. I wasn't saying that's the top and it's going to do that. I wasn't saying it's going to push up. I said it's going to run flat from here, guys. And I said the same with the Aussie from here. I said this will run flat. And if I'm right, then this will come back up and it'll run flat. So potentially there's something to think about, guys. Let's move on a little bit. Aussie, New Zealand. I love trading the Aussie, New Zealand, but sometimes it's hard to get it right. There is a place where I love trading it, but it only comes around every year or two. And it's, if we look at it in the daily, when it does something like that or that or that, in other words, when it comes down to the bottom of this range that it does, or even here. I love trading it long. I mean, way back then, there you are. We're talking about it. When was that? That was 2016, December, something 2016. New Zealand Aussie long, guys. And I remember battling through that and eventually catching it. And I caught one there, and I caught that one. That one, I traded that one the whole way up. I don't like trading it for short for some reason. Not entirely sure. I'm a little bit unsure at the minute now where it's going to go next, but we'll keep an eye on it. And if we get an idea where it's going to, I suspect it'll come back down. It's just the way this thing trades, guys. It's just been running flat for 6 years. Doesn't mean it can't break out and go. You're kind of looking at it and you're going, you know what? This is what it's been doing for 6 years. So I don't have a trade on that at the minute, guys, but I love trading it. Aussie Swiss, looking for a break out of that. Let's get off.